Now it's time for the ETF report. Our guest says just like cassettes were replaced by CDs, which of course are history now themselves, ETFs are slowly replacing mutual funds. Let's get more from Andres Rincon, head of ETF sales and strategy at TD Securities. Andres, thanks very much indeed for joining us.
Andy, thank you for having me.
Give us some perspective or stats on the extent to which ETFs have supplanted mutual funds.
Yeah, look, we've seen a great evolution over the last few years. And the way I call it, we're currently at the great migration stage of moving from the mutual fund structure to the ETF structure. And as you mentioned in the intro, currently we're in that same transition that the music industry had many years ago and over decades, from the cassette to the CD. It took a long time, but we are slowly moving fully to the CD structure, and we're doing that in the fund industry right now through ETFs. If you look at ETFs specifically, over the last few years, we've seen ETFs outsell mutual funds consistently now over the last couple of years. Just last year, we had $122 billion going to ETFs, and that's a new record. If you look at just January itself, we had about $22 billion in net inflows, or $27 billion in gross inflows, which is a significant number, especially when you compare it to the U.S., which also had a very strong year, but not a 10 times multiple. Generally speaking, a 4.5 multiple versus the U.S. So Canada is doing really, really well. We're also seeing brand new ETFs come into the market here in Canada every single year, to the tune of 1.4 ETFs every single trading day, which is an astonishing number.
Yeah, and it's interesting. Sorry, I was going to say the big growth has been in active ETFs, but you say that still only about a third of the ETF assets under management in Canada are active. The rest are essentially passive.
Yeah, and it's important to remember that Canada is a leader in active ETFs, but it's only a third of AUM. But if you look at just last year, 2/3 of ETFs that were launched were active ETFs. And now we're seeing flows also going to active funds. Last year was almost the first year where we saw more than 50% of inflows in Canada going to active strategies. And so this has been a big transition, similar to what we see in mutual funds, towards an active structure, an active strategy. And not just here in Canada. In the U.S., we also have a large move into the U.S. A third of flows in the U.S. have been in actively managed ETFs. And look, in the U.S., the actively managed portion of ETFs is very small. It's called 10% or so. But that number is growing quite rapidly. The other clear signal that we're moving into a more mutual fund-like industry in ETF land is how complex these products are getting. We're seeing complex derivatives, autocallables, notes, private assets now in the ETF structure. Not just today, last week, we had a new filing in the U.S. That looked more like betting markets in the ETF structure. So we're getting a lot more in the ETF, and it's looking a lot more like the traditional mutual fund industry.
It is interesting you touch on this apparent blurring of the line between gambling and investing with the rise of these prediction markets, for example.
Yeah, and that's a very interesting development. We will see if the regulators in the U.S. and maybe in the future in Canada will look at these and it will give the okay or the green light on these, given that they're completely different. The assets that they will hold will be very different. They'll be very much a binary ETF. So we're all really looking forward to seeing what the regulators will say. And from a market making point of view, this will be quite interesting for us to look at.
You note that the industry, no lack of creativity. There's a critical minerals ETF, for example, XETM from iShares.
Yeah, the XETM or the iShares S&P TSX Energy Transition Materials Index ETF has been one of those ETFs that has garnered some attention. It's not just that one. In the U.S., we've seen about $5.6 billion go into critical minerals ETFs. Now we have not just Canada, but also the US and many other countries look at critical minerals to be part of what we consider defense and part of the sovereignty of a lot of these countries. So we're seeing a lot of interest in these names.
Mm-hmm.
Great example is silver. We had a lot of assets going, a lot of trading going to silver over the last few weeks. Just a couple of weeks ago, we had $41 billion in trading in a single day, more than the broad market ETFs, just because these markets are moving so much, and there's so much attention right now with silver and some of the other ETFs. We also have copper that's been quite popular. And overall, the trade has gone more towards Canada. We've seen a lot of interest in Canada, not just from an outperformance point of view, but we've seen a lot of interest in Canadian markets. We are trading more and more than we've seen in a long time, Canadian equity-focused ETFs. And that's just based on the amount of interest that we have on critical minerals and commodities in general.
Thank you very much, Andres. Really appreciate it. Andres Rincon, Head of ETF Sales and Strategy at TD Securities.